Patrick, let's start with you. Do you agree, do you believe that the chip market conditions are improving? Qualcomm CEO Steve Mollenkopf noting particularly that those chips with older technology are the ones that are poised to really improve currently.
So first off, we're seeing unprecedented demand in the market, which is truly the biggest driver for all of these chip shortages. I mean, the last quarter, we saw PCs up 25%, Chromebooks up 5x, even tablets were up double quarter on quarter. So it's really about this increased demand. And depending on how you look at it, increased demand typically means higher prices and higher profits for these companies until we get into I'll call it a chip outage. But I think we've got about 6 more months of runway before demand gets more normal. Now, a lot of this will be dependent on how many stimulus checks globally, how many stimulus payments we see all across the globe, because what we found is that consumers are going out and buying computers and phones and tablets and Xboxes with their stimulus checks.
And they might be paying higher prices for those items, given some of the supply constraints that we've been seeing. Vijay, though, there is something kind of curious going on in the market right now, and that is that we've seen, obviously a huge run-up in shares of semiconductor companies over the last 12 months. But in the last week and really in the last month or so, we've seen a lot of the big names sell off quite significantly. Why do you think that is? Is it that inflection point that Patrick is talking about, investors just bracing for that? Or is there something else going on, and do you see this as a buying opportunity?
Thanks for having me on, Emily. Yeah, we do see this as a buying opportunity. I think if you look at the SOX, the semiconductor index, it's up almost 8% for the year. That's almost 4 times what the Nasdaq is up, and last year is up almost 50% ahead of what the Nasdaq did. And I think if you look at what happened the last month or so, a little bit of the underperformance was what we saw with the momentum to value shift. And we are starting to see, again, that shift happen again, where now you're starting to see some of the buyers come back into semis and into tech. So we think there's the best is yet to come. I think if you look at the demand on the automotive side, work from home demand is very strong. And if you look at the June quarter especially, I think it will have the strongest comps for semiconductors in the last 20 years. If you look at June of 2020, it was very weak because a lot of the automotive industrial sites went into shutdowns. And so as you look at June 21, it comps a very weak last year. So we think the best is yet to come in terms of what you're going to see in terms of top line and earnings growth. And that goes to what Patrick was also saying in terms of very strong demand on the auto industrial side. Vijay, work from home demand continues to be strong as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.